Corporate tax and nexus for non-resident juridical persons earning income from immovable property in the UAE. In the context of the UAE's corporate tax regime, a nexus refers to the legal connection or link that a foreign entity, also known as a non-resident juridical person, has with the UAE. This nexus determines the extent to which the UAE has the authority to tax income earned by these foreign entities. While many factors can establish a nexus, one significant criterion is the ownership or exploitation of immovable property within the UAE. The presence of a nexus is crucial because it triggers corporate tax obligations for the foreign entity. 1. Nexus based on income from immovable property. According to Cabinet Decision No. 56 of 2023, any non-resident juridical person that derives income from immovable property located in the UAE is considered to have a nexus with the country for corporate tax purposes. This means that when a foreign entity earns income from immovable property in the UAE, it becomes subject to UAE corporate tax laws, even though the entity is not a resident of the UAE. The concept of a nexus in this context is particularly relevant for foreign entities involved in activities related to property ownership or exploitation within the UAE. This provision ensures that income generated from immovable property in the UAE is taxed, irrespective of whether the income is earned by a UAE resident or a foreign, non-resident, entity. 2. What constitutes immovable property? The term immovable property is a broad concept that covers various types of property and rights. It is generally understood to include any property that is permanently affixed to land or seabed. Specifically, immovable property includes the following. Land. This encompasses any areas of land within the UAE, whether undeveloped or developed. Buildings. Structures or buildings permanently attached to land, including residential, commercial, or industrial buildings. Structures or engineering works. This refers to any long-lasting constructions or engineering works that are permanently attached to land or the seabed, such as bridges, roads, or tunnels. Fixtures or equipment. Any fixtures, fittings, or equipment that are permanently attached to a building, structure, or engineering work, which essentially become part of the real property. In essence, immovable property involves assets that are physically attached to the land and cannot be moved without altering the nature of the property. These assets are recognized under law as fixed assets and have a lasting connection to the location they occupy. 3. Taxable income from immovable property. The income derived from immovable property is subject to corporate tax under the UAE's tax regime. The types of income that are considered taxable include, but are not limited to: income derived from a right in rem. This includes income generated from legal rights associated with the ownership or use of immovable property, such as rights of usage or lease rights. Sale or disposal of immovable property. Income from the sale or disposal of land or buildings, as well as any capital gains realized from the transfer of ownership. Assignment of property. Income from the assignment or transfer of rights related to immovable property, such as leasing rights or land use rights. Direct use of immovable property. This pertains to income generated from the direct utilization of immovable property. This could include income from operating a commercial or residential building, or other properties used for business purposes. Letting or subletting of immovable property. Income derived from renting or leasing immovable property, including subletting. This covers both residential and commercial leases. Exploitation of immovable property. Any other form of exploitation of immovable property, such as using the property for commercial gain or as a part of a broader business activity. 4. Application of corporate tax to non-resident juridical persons. For a non-resident juridical person that earns income from the immovable property in the UAE, the tax is applied to the income attributable to that property. The nexus established by earning income from immovable property ensures that the foreign entity is subject to the same corporate tax rules as a UAE-based entity, specifically in relation to property-related income. This means that if a foreign entity owns or leases property in the UAE, and it earns income from that property whether from renting, selling, or otherwise exploiting the property, it will be subject to corporate tax in the UAE, even if the entity does not operate a business or maintain a physical presence in the country beyond the property itself.